Very good morning to you, ladies and gentlemen. Bonjour, mesdames et messieurs, and welcome to this second day of AFIS and to this panel discussion on open finance and connecting the dots on big data. My name is John Everington. I am the Middle East and Africa editor for The Banker magazine, which is part of the Financial Times Group. I'm based in London. We have a wonderful panel discussion today. So, the development of open banking and finance has been one of the most interesting phenomena that we've seen within the retail banking sector worldwide in recent years. And open banking is now emerging here in Africa as well. We've had a number of major banks here on the continent, including UBA, Ecobank, and many, many others, who are starting to open up and embrace APIs. And then also we've had Nigeria becoming the first market on the continent to publish open banking regulations this March. Some banks are still, however, reluctant to open up their APIs due to a lack of clarity, regulatory clarity, should I say, outside of Nigeria. And there's been concerns about proposals that would centralize and control access to open banking APIs, and also multiple individual partnerships will leave banking and mobile money data, physical documents, and digital metadata siloed and underexploited. So what are the next steps to optimize data in the open finance era? We have a wonderful panel here to discuss the many issues at play. First of all, to set the scene, I'd like to hand over to Jean-Alain DICOUM, who is the founding and managing partner of Siloam Consulting, to the stage, and he is going to give us his thoughts and the state of the industry. Jean-Alain, welcome to the stage.
Good morning. The idea here is to put a couple of ideas to set the stage for the discussion that will happen later on. And our reflection today will be okay. The first element that we want to put is the frame of the discussion that we have. What are the stakeholders in open finance? The idea here is really to keep in mind the definition of open finance, that is sharing financial data from the customer to third-party providers in order to enable them to enhance the customer experience, to bring innovation, and to bring a certain level of competitiveness. Having also on the background the fact that it increases financial inclusion. So, who are the stakeholders? I try to be as schematic as possible in order for us to see the different groups in terms of function and not necessarily in terms of the role. So those are not in marble. So first category, I call them the data holders. The data holders are mainly represented by the financial incumbents, the incumbent financial institution that are the financial institution. The second element and the second part on the right are the data users. Data user here is being defined as the companies that are using the data to provide services in the open finance ecosystem. And in the middle, if you allow me, there are the solution provider and the data enablers. Here you have a category that at the first approach can be considered as only the one that are providing API and data aggregator. But in the context, African context, where you have a technology that is provided by the telco, this is where you will have the telco. So technology, hardware, software. And then in the middle of it, the one that are providing consent, but are also final user of all these products are the consumers. All around this, you have what I call regulatory authority, but are not as strict as you would approach in terms of pure financial services, but you also have self-regulated industrial unions or any any organism that is officially providing the rule of engagement in this ecosystem, either be financial or in terms of data or in terms of technology. What do we have? The second element of our reflection is to see what framework is being put in, why we're benchmarking on the different regulatory environment. You have certain rules that can be categorized in access and competition, for example, security. You have consumer protection regulation. You have licensing and authorization, who has the right to, who is licensed to actually enter in the ecosystem. And you also have bodies, and the sixth category is government oversight and regulatory authority. And with that, we've been able to define 3 categories, and I think that it's also a question of discussion and perception. The first environment, regulatory environment, is what I call open, but I can complete by saying self-regulated. In that, people are trusting the market to find the right modus operandi and the good relationship. It is often considered as being the American approach is something that is really laissez-faire, but not in the sense of bringing them a mess in the market, but really trusting the different stakeholders to find balance. The second part, so what you have here, you have a very fast innovation, but you have the counting on self-regulation to establish the protection of the different stakeholders. The second is a balanced approach between innovation and protection, where you have regulation, but you also have a very strong framework in terms of accountability and oversight. So there is the broad rules are established, but all the stakeholders are required to be accountable for the action that they're taking. And you have a more prescriptive and more restricted environment where you have many regulations, but you also have a high level of protection. If we come to the item of centralizing open API and data, what are the processes and what are the governance? 3 set of processes are coming. The first set of processes are development, i.e. developing standards and enabling interoperability, portability, and this includes all the different stakeholders, third-party provider, consumer, and financial institution. The second element is management. You talk here about collecting data and managing them, organizing them in terms of, in order to have them being able to be exploited. And the third element that is actually arbitraging, a kind of arbitrage process that sets the justice between all the different stakeholders is the dispute resolution. In terms of governance, you have oversight. You need to have a body that has the oversight of the ecosystem. You need transparency. It's like the rules are the same for everybody, but are known to everybody. And the third element is accountability. The central body is accountable to all the stakeholders. If we have a special focus on the personalized financial services in Africa, you have a couple of trends that are actually emerging in terms of new product development. The first is, needless to talk about it, is mobile money, and that has been the main driver of innovation for the couple of years. You have agent banking, that is a way to bring services close to the customer through agents, people that have the role of being, providing data, providing services to the customers and being as close as possible in order for them not to go to the classical agent, but to be able to have access to financial services through operators that will be shopkeepers or any any actors that you can have that are close to the customers. The third element, the third trend is digital lending. There is a necessity for people to be included, but also to have access to banking services, i.e. the possibility to lend, to borrow from the financial institution. And a great work is being done to bring loans, microloans or nano loans at the level of the mobile phone that people have. There is also some initiative in terms of InsurTech, is like bringing insurance product into a retail form that enable people to actually be using. And then you have the latest, but is also important, is embedding finance, i.e. incorporating in non-financial platform financial services. So it goes to the payment of your taxi costs directly, to elements that are buy now and pay later, depending on the level of sophistication that you have. Just to, the last element that I wanted to talk about is there is a lot of hype about AI. And the question is always, what expect? Should we be looking forward to AI, or should we fear AI? But I'm just going to, it's a subject of reflection, of thinking or food for thought. But the main idea here is AI should be able to make data accessible, understandable, and useful. And when we take all these three directions, you see that actually it can actually underscore the necessity to have AI, first in terms of accessibility, data collection, and the possibility that AI has, for example, to do fraud detection. In terms of understanding, is really taking a huge amount of data and being able to find insight. And one of the main applications that comes to mind is really credit risk assessment. And the utilization is really how can we use the power of AI in order to take decision. I'm talking about the possibility, for example, to do portfolio selection in a trading environment and take decision, accelerate. You also have one aspect of it that is, how do we do a kind of a 24-hour approval process in terms of loans? So all these three directions that AI can facilitate can be applied to the whole galaxy of services that are linked to open banking. Thank you.
Thank you very much indeed, Jean-Alain, for your presentation, which is a very nice kind of framing device for the conversation that we're going to have. So without further ado, I'd like to invite our expert panel on stage. First of all, Winston Reed, who is the CEO of Alvin, and then Mr. Sionle, who is the Group CEO of AFG Holding. And then we have Mehdi EL JAIR, who is the Regional CTO for Financial Services for Huawei Northern Africa Entreprise. And last but not least, we have Mr. Mohammed Saad, who is the Deputy CEO for the Casablanca Stock Exchange. Please give a warm welcome to our panel. Well, gentlemen, a very warm welcome to you, and thank you so much for joining us today. I think Jean-Alain gave us quite a lot of food for thought in this presentation. I mean, maybe Winston, perhaps if we could maybe just start off with you. I mean, and always with topics like this, I like to take a step back and just thinking, okay, well, you have this thing called open finance, but what's it for? And what difference does it make to customers on an individual basis. I'm just wondering, maybe, can you sort of like just talk about what are the sort of the most exciting sort of and most relevant services? Ooh, closer. Okay, is that better? Okay. I can repeat my introduction if you like, but I think we'll be okay. Just to say, I mean, just asking once again, Winston, I mean, for your perspective, I mean, within Alvin working in what we would call a TPP, what are the sort of the biggest sells of open finance, and what are the sort of biggest benefits to customers? I mean, Jean-Alain mentioned a few towards the end of his presentation, but I'm just, from your perspective, what are the sort of the biggest promises?
Yeah, so it's a great question. I'm happy to answer it. I think first and foremost, I mean, I've now been in the African continent for about 7 years, working in Morocco, Nigeria, Cote d'Ivoire, next to Nigeria as well, in Ghana, and then now in Kenya. And what I've seen very consistently is that, sadly, there are a lot of African retail customers who have a very recent memory of their data in all sorts of different ways, financial and otherwise, being manipulated and not being used for their benefit, to be used in different ways in order to figure out how to sell them different products that often they don't need. And so what first and foremost, and I'm going to come back to your question in a holistic sense, but first and foremost, something that I'm very passionate about, and I'm very excited about with the gospel, frankly, of open finance, is that it introduces the prospect of enabling people to, in a fully digital way, allow for different institutions that actually have their best interests at heart, to figure out how to, exactly as Jean-Alain was saying, personalize their experience of getting from wherever they are today to wherever they're trying to go tomorrow. So on top of that, I think it's important to note, I feel like when you look at different markets around the world, especially places like Hong Kong or Singapore, the US, the UK, places that have been playing around with the prospect of open finance for a while. What I've seen is that there are two rather distinct phases that tend to emerge rather linearly as well, in terms of what are the kinds of new forms of value that are delivered to customers initially, and then what comes later. Alvin as a company that does embedded financial services for banks. We basically help banks use the data that they're sitting on to cultivate more creditworthy retail customers. We're in what I'll describe as phase 2. But phase 1, I would at a high level characterize as being basically helping people get access to very basic financial services. So right now, it's very sadly still the case that roughly 70% of the African continent would have to invest a full month's income in order to get to the nearest physical branch. Talk about financial exclusion, right? And so even just starting there, the idea of enabling people to, in a fully digital way, allow for different institutions to use different angle points to verify their identity, so that they don't have to go to a nearest bank branch in order to put their signature on a physical piece of paper, and they can get access to a financial account. I mean, let's just start there, right? That's the first piece that you usually see. The second piece, which I think Jean-Alain very adequately also touched on, was the idea of democratizing access to credit in a very basic sense, right? So currently you have a lot of, frankly, not just banks, but also fintechs, digital lenders that are coming onto the scene that basically are saying, okay, well, for a lot of banks, 90% plus of the African continent is informal, right? Meaning a lot of folks will have relatively consistent incomes, but nonetheless fluctuating incomes. And so you know, we're seeing what is it? I mean, McKinsey had just revealed a report saying that roughly about $360 billion is the credit gap that we're looking at between retail and also SMEs in the African continent. I mean, it's just really, it's really tremendous. So the second piece is enabling for people to increase the likelihood of being approved for any loan by allowing for a bank to say, okay, and also automatically, right? Allowing for a bank to say, okay, I'm gonna easily link multiple accounts, or I'm otherwise gonna authorize access to more than just my core account with you, to enable for you to see, actually, I do have funds elsewhere, to increase the likelihood for me to get a loan. And then there are a few other pieces, but I'll pause there as far as phase 1. But phase 2, and I'll end here, is leveraging personal data in order to, like I said, personalize different services that will guide a person to their ultimate end goal. And basically what that looks like, and fortunately that's what we do at my company, that looks like understanding, okay, these are your spending patterns. We're able to understand that, not only amongst recognized merchants, but also against peer-to-peer transfers, right? I mean, which is ultimately what the informal economy looks like. And then on top of that, these are your ultimate savings goals. Say, John might be interested in buying real estate, right? So being able to automatically show you this is how much you should be able to spend on, say, groceries or restaurants or entertainment or whatever it is, in order to make consistent progress toward ultimately being able to qualify, for example, for a loan by your sponsoring bank for this Alvin service in exactly, say, 22 months, right? Like that really is the promise of open finance.
Indeed. Very good. Well, John may be interested in buying real estate, but in London on a journalist's salary, that's not going to happen. So let's just put that to one side for the moment. So Sionle, Winston's just kind of like given us sort of a very good overview. From sort of a TPP provider's perspective about what he wants to do. What can be done with data and the sort of and the potential there. From a banking perspective, AFG, you've got 4 banking operations with, I think, 2 more on the way very, very soon. I think, what's the sell for you guys as a bank to really kind of open up your data to third parties, but also kind of embrace the kind of the open finance kind of, an open finance perspective and framework, as it were?
Thank you very much, John, for your question. First of all, I would say that maybe the question is not if we are willing to open our data to fintechs. Maybe the more accurate question is what can we get from the open finance world in order to improve our customers' experience, in order to improve our competitiveness, and in order to stay in the market. Clearly. So first of all, as banks, we need, because the development of technology is so fast now that you can't get inside your organization all the competence you need to grow, to develop, and to ensure that you are catching up with the market as fast as necessary. So you need somehow at a point in time to rely on outsource third parties solutions that they develop. So since the eruption of the internet, the mobile technology, and the cloud architecture, and the artificial intelligence development, fintechs have developed very fast, and now they have many solutions that can help banks to remain, let's say, competitive and to be able to abide to the expectations of the customers and the needs and the expectations. And this is not new for banks. Using third-party solutions have been a long way process. It's not new today. What is new is that it is going faster than before, and solutions are more technically advanced than before, so that you can't really, from inside, develop all what you need. So the question is not if we should open our data to the fintechs. The question is how we can manage it in order to remain compliant with our regulation first, and in order also to ensure that security of access to our customers' data is ensured for sure. And then if we have answers to these 2 questions, cybersecurity issues are so relevant today, everybody knows. If we have answers to these 2 questions, we need to ensure that our legacy systems or our traditional systems are open enough to be able to integrate these solutions coming from outside. And in a bank like ours, in a group like ours, we've ensured that we've chosen a technology solution that is open enough in order to be able to welcome APIs of the fintechs, of third parties. So this is a very important and key issue to ensure that your legacy system or your IT system is open enough and is flexible enough. not only you are able to accept APIs from outside, or to open yourself to APIs, but also you need to have an architecture that is open enough. And for sure today, the cloud architecture is the most open, is the most capable of accepting the AI solutions to come and plug to your system. So this is important, and this is what we are doing currently, having an open system that is API bound, and having an architecture that is spread enough and that is modern enough, scattered within the cloud, in order to be able to deal with these solutions coming from outside. So this is the point I wanted to make first.
Very good, and it's a point very well made. And this brings us nicely on to Mehdi, who will very happily sell you such a solution.
Yes.
I mean, in terms of, this all sounds very nice, and there's a sort of a clear pathway. But I mean, when it comes to that implementation of such solutions and just kind of helping banks get ready, I mean, what have been the kind of the biggest challenges and hurdles that you've had to work with banks over the years when they're preparing for this kind of more open approach? It'd be good to get your insight into your experiences with lenders in this area.
Yes, thank you so much, John, for this insightful question. In fact, open finance, by definition, is the data exchange between financial institutions and what we call TPPs, which are third-party providers that are licensed by regulatory bodies, based on customer consent. So by definition, this is open finance. We can talk about mobile money. This is a use case. This is a scenario of open finance. We can talk about embedded finance. We can talk about super apps. All these kind of business models are very innovative, new trends in the banking sector. So when it comes to the African continent, we see that the traditional banking is somehow reaching some limits in terms of, especially in terms of financial inclusion. So currently in the African continent, there is maybe some 40% of adult population that is banked, that have bank accounts, and some 60% or more doesn't have any access to the banking infrastructure. So here we can see the impact that the mobile money have in our region. Currently, there is more than 500 million mobile money accounts in the continent, serving people not by bank accounts, mainly by USSD. Even without, for more than 70% of transactions, we don't need smartphones, so it's USSD. So open finance and opening financial institutions is very crucial for our African continent. When it comes to the challenges, from our experience in Huawei, we see that there is many challenges. The first challenge, maybe it's not technology. It's about regulations. So we know that in the African continent, we can talk about Nigeria, about South Africa, about Kenya, 2 or 3 other countries that have this kind of regulation, open finance. But for the rest of the countries in our continent, we lack this kind of regulation. So we need more acceleration in terms of regulation. So this is a very important aspect that central banks and regulatory bodies need to accelerate the regulation of this new kind of banking, especially when we talk about open finance in general. The second challenge is maybe related to technology. So even if we imagine that in a country X that the central bank issue this kind of regulation, we need to take in consideration that the existing financial institutions, many financial institutions are still using some obsolete infrastructure, some mainframes and host systems. So those kind of technologies, those kind of infrastructure are closed. So they cannot build catalog of APIs based on this kind of infrastructure. So there is this aspect, and there is also an aspect about the quality of data. So if the data as managed is messy, when we will open the system and share it with third parties, it will be we will have other problems. So there is this technology aspect, technology modernization that need to be done on the side of financial institutions, adopting technologies, open and distributed technologies. We are talking about mainly about cloud. So cloud is very important for open finance. We know in many countries in the African continent that we don't have regulations about cloud. Mainly cloud is forbidden, is considered as public cloud, but there is no regulation. There is few regulations to regulate private and hybrid cloud. So this is very, very important for the development of this kind of finance. And maybe the third challenge to finish is also the financial education from customer side, because as I said initially, open finance is sharing data based on customer consent. So if the customer doesn't have the right financial education, he cannot deliver this consent. So it's very important for open finance also to educate customers to communicate around these new business models and include, in terms of education, have an education inclusion for our customers.
Indeed. I mean, the financial inclusion education is, I mean, it's a very live issue, and I mean, it's been discussed at length. So, I mean, and this is just another aspect of it. So, it's a point well made. Mohammed, you've been very patient at the end of the stage, so I'd like to turn to you now. It'd be very interesting sort of to hear from, I mean, your perspective at the stock exchange within Morocco about what sort of your approach to sort of the open finance and open data and the sort of the projects that you've been pursuing in this area in terms of opening up the stock exchange's considerable data to third parties. And I mean, what sort of really just kind of learning about what your intentions were with this project, what you were hoping to achieve, and also just sort of how you went about it, and maybe just some of the sort of sticking points that you encountered along the way. But it'd be great to hear about your experience in this area.
Thank you, John, and thank you for the organizers for the invitation and to be here in this lovely country. That's my first step in this country. I want to be the last. So yes, a lot of things have been said when talking about big data, and but also the other technologies, talking about the cloud and AI and all that stuff. What is important to say here is that companies nowadays, especially coming from the financial sector, could not live intramuros. Their information system and technology could not be used only by the employees and only by itself. For sure, we are spread and we are connected to many other sectors. So talking about the capital market and the stock exchange, it is a platform. As we can talk maybe about Amazon and other platforms, a stock exchange by nature is a platform where we can find investors, we can find students, fintechs, universities, and market data vendors. So a lot of kind of special clients would come to intervene and to make it dynamic. So talking about big data, we cannot talk about it if we don't have an effective IT and effective information system at a certain maturity. And when it's okay, algorithms would come to make that analytics. So algorithms could be AI or non-AI. A lot of people are talking nowadays about AI, where maybe it's a simple set of instructions written by blah, blah, blah language, so nothing to have with but if it's a deep learning or something like that, it's better. It's going to get something out of it with a high added value. When talking about all that, we're going to talk about the cloud storage and cloud use. My colleague talked about that, and we know that Huawei are very highly positioned in that sector. So, and when talking about that, we have also to talk about the maturity of the. So let me maybe share with you a funny experience. My coup de cœur of 2023. We have experienced it in stock exchange, and you know that with that cheap ChatGPT and AI, the hype of the end of 2022 and January 2023. And as you know, we have a pillar in our strategy that is to be very close to universities and very close to fintechs. And that's the open innovation. Talking about open finance, that's open innovation, because I can remember the CEO of Sun Microsystems that saying, no matter who you are, most of the smartest people work for someone else. So the competency and the expertise is somewhere. So that's why we are very close to the universities and very close to fintechs, and we have what we call the exchange championship. We have a platform open to universities where students, and in a delay of 1 month, they come to compete. And at the end of that month, we're gonna rank the best in terms of performance, and they are praised and all that. So we were about to launch our competition 2023 by April or March 2023. And during January, we had that hype, you know, a lot of people talking about ChatGPT and AI and this and that and all, AI and all that stuff. And I sent a message to my colleagues at the Digital Services Department at Stock Exchange, and I told them, well, try to think about that, try to maybe get something out of it if we can use that. And it cost something like 4 or 5 days, long days to my colleagues. So they went and looked in that new technology, how to integrate that in our systems. After 4 days, they called me and told me if you can come to your office just to show you something, and they were there. And they managed to, through the OpenAI APIs, to connect to ChatGPT, to OpenAI, and to integrate that to our platform. So it's not only that, you know, that link on websites. It was shown on our applications, platforms. I have 2 icons. One of them is the ChatGPT. It means that they use the API to question and to query on ChatGPT. Through what? Through a set of questions. Let's say I'm a student, I'm gonna compete in that championship, and I have a certain behavior. I have a pattern in terms of an appetite in terms of investing. So through a set of questions, the students would answer the question, that's 20 questions. Then that questions as a whole is sent to ChatGPT. And ChatGPT would analyze that and would come with the behavior of risk appetite, but also an investor. This is how you should intervene on the market. So that was good, because at that time, January and February, as you know, a lot of people would go to test and this and that on ChatGPT, and that was also an opportunity to make that on. Second icon is that when a student is about to buy or to sell a share, he could query on ChatGPT, what is the performance of that share during the last year? So when clicking on that icon, I would take the whole history of transactions, send it to ChatGPT, and it would come with an analysis through different laws to say, yes, Maroc Telecom or Tijari or Bank of Africa, here is the performance during the last. Then the students would decide if he wants to buy or to. Then we launched that championship like that during the month of March. We had something like 2,000 students from all around Morocco subscribing and competing. And believe me, at that time, we had the major index on stock exchange was about 10%, plus 10%. The first ranked students bet the index by 28%. Instead of 10%, he did a 28% performance. And we noticed that they were very fond of such, like a game, you know, like, yes, yes, there's the artificial intelligence and there are the competition, so that's okay, fine. So people, they went on that, and it was one of our best platform and projects in that 2023.
It's so interesting.
Just to say, maybe, and it's a call also for action, because we have experienced that some years ago with some countries, some universities coming from sub-Saharan countries in Africa, and in the near future, and that's a call, if ever there's a need, we can also open it to other universities in Africa, you know, in the countries, friends and brothers to Morocco.
Very good, very good.
John, if you allow me, I would just comment.
I was going to ask you about AI, and I'm sort of journalists are a bit scared of ChatGPT because it's going to steal all of our jobs at some point. So, but I mean, particularly sort of, within this kind of area, the use of AI, it'd be great to get your thoughts as well on this.
Yes, but just before answering, I would just want to comment on the story that has been shared by Mr. Mohammed Saad. This is what we are talking about when we talk about financial education, when we talk about opening financial institutions. This beautiful, I'm really happy to hear about this kind of experience from La Bourse de Casablanca, Casablanca Stock Exchange. This is the kind of experience that today financial institutions need to invest in. This is good for students who are the users, so more education for the students. This is good for the stock exchange of Casablanca because it allows them to explore new technologies and see the capabilities of those technologies in their core business, which is trading, the trading. And also it's good for the economy because for the government, because the mission of the government is pushing the companies to adhere to the stock exchange, to have this culture, to have this education. So without this kind of initiatives, it will take us a lot of time to develop open finance. Coming back to your question about AI, I don't believe that AI will take take human role in general. What I believe is that AI is augmenting human role, but there is some specialties or some businesses that need to be developed. So currently, when we talk, for example, about source code development, so currently ChatGPT have a wonderful capability of producing code with high quality KPIs. So this is something good. This is something that will help companies to be more creative, more innovative. So we need also to see the positive aspects of the technology. Of course, when we talk about AI, it has also some negative aspects. Can be used, it's a tool, like any tool. So currently, if we talk about a knife or an arm, it's regulated. So we cannot take a knife and go outside and hit someone, or use an arm to hit someone. It's regulated, it's law. So AI also is a tool and needs to be regulated to be sure that is used in the right way. But in the financial sector, for sure, AI needs to be adopted. Now, AI is considered to be in the category of emergent technologies. So to be able to use AI, you need other technologies. You need cloud. For instance, you need cloud. Cloud is very important. Without it, it's very hard to imagine how AI can be effectively used. But currently, to be able to face the different challenge, especially when we talk about Africa, financial inclusion, the cost of financial services, this kind of problematics needs to be addressed by using technologies also. So AI can help to lower the cost of credit scoring, of anti-fraud management, of customization and personalization of products. So we really, I encourage banks, financial institutions to sit down with technology providers and have a reflection on how to embed these technologies in their core business. And we saw many banks that did this, and we saw the results. I'm thinking, for example, about DBS in Singapore, which currently use AI, use big data, use cloud, and we see that in 10 years, they went from being one of the worst banks in Asia Pacific to be the best bank in the world currently.
Indeed. So, I mean, it's been fascinating to hear, so like particularly about, I mean, the technology side, but I think I'd like to bring it back a little bit to some of the things that Jean-Alain was talking about in his presentation a bit earlier, and that, of course, is the regulatory approach. I mean, it's still, throughout much of Africa, the regulatory approach is still kind of being developed, and they're still talking about how they're approaching open finance and how it's going to go. And maybe, Sionle, maybe if we can come to you, because Jean-Alain in his presentation gave the sort of the open, I forget the exact terms, the open, the sort of the balanced and the more kind of closed. I don't think, those weren't the terms used, but I mean, I think you get the point. So I think just, I mean, from your perspective as a bank, I mean, with open regulations being developed, is there a particular approach that you favor? I mean, would you prefer if the regulator gave a little bit of guidance and then left it to you as banks and third parties to kind of develop the standards? Or would you prefer if the API standards were kind of developed kind of like en masse and then given to you? It'd be great to get your thoughts on this.
Thank you very much. Indeed, as I said earlier, as we are prepared to be able to implement the open finance in our environment in terms of technology, both on the core banking system that we've chosen, and in terms of architecture, as we just said, in terms of being able to host our solutions, our IT solutions in the cloud. So as we are ready, technically ready for this, the question now is how the regulatory framework can be put at a point that we can use we can fully use what the open finance can bring to our businesses. Indeed, when you look at when you listen to Mr. Mohamed Saad, and the very accurate example he gave on the stock market, and how with AI they could boost the performance of some shares on the market. For banks like what we are doing, the performance indicators would be around creditworthiness, assessing creditworthiness of our customers, about segmenting precisely our customers, about being able to monitor the churn performance of our database, our customer database, and so on. So the question is how could we, because we are not in America, we are not in Nigeria, unfortunately, we are not in some Eastern Africa countries where the regulation has been more flexible in order to accept these evolutions in our core banking system. So the question is how we could manage and support our regulators in order to go forward or towards these improvements that the open finance will bring to us. So I believe if you want to drive your regulator to accept such big changes for them, you need to put forward for what is the interest they can get from it. And I believe that if you are talking to regulators in terms of risk management, better risk management, when you are saying that I will improve the cost of risk of my portfolio because I'm using these open finance solutions and AI capabilities to deal with broad or large amounts of data using the outsourced sources of data that will enable me to profile the risk capabilities of my portfolio. So if you are able to explain to him how you will improve your risk management, and if you are able to explain to him how you will better control the fraud around your system, because AI is coming with predictive solutions, is coming along with how do you call it? About machine learning features that support the profiling of your customer base and your information system architecture. If you are able to explain this to the regulator, and also as you rightly said, if you are able to explain to him that you are going to improve the financial inclusion in the country thanks to the usage of the power of AI, you will be able to encompass more people in the country into the banking system. So if you are able to explain to him the interest, all this interest he can get from AI, then you will maybe help your regulation to evolve. Yeah. I believe this is what we must be doing now as professionals, as bankers, because we've done what is on our side, and we need now the regulation to do what is on our side in order for us to take advantage of what the open finance will bring us.
Yeah.
Thank you.
Indeed. No, thank you. And I mean, Winston, I mean, from your perspective, I mean, in terms of kind of what you want to see, sort of what kind of approach you want to see from regulators, I mean, can you share your perspectives in this area as well?
Yeah, I was listening intently to my peers here, and I have a few thoughts I think that are pertinent on this subject. I mean, I think first and foremost, sorry, I'll come closer. I think first and foremost,
we're competing against the air conditioning at the moment.
Yeah, exactly. Competition has increased. I think first and foremost, it's important to note that whenever there's any kind of situation where there's no legacy, that in and of itself actually can be used as an advantage, right? So I mean, the U.S. Dodd-Frank Act, for example, was 2,600 or so pages long. I mean, it was a colossal document. In the U.S., it is a bit more open-oriented, but there still is a massive morass of regulations that still need to be modified in order to really bring the U.S. Even further into the future. Whereas I think a really exciting aspect of how a lot of African markets look right now is the fact that regulators, if they're very careful right now about how they readjust the way that they look to monitor the performance of companies, and they actually can be the ones deciding what kinds of products do we actually want to make safer to use rather than others. And it can actually put the regulators, as opposed to the innovators, in the driver's seat as far as how different types of financial products are created for the future. That was the first piece. The second piece is, I think it's also important to just accept that this will not be an immediate evolution. I mean, I think trying to identify a specific area of regulation to modify and then to modify it successfully without disrupting the rest of this entire morass of a program, of an operation. It's almost like trying to identify an individual piece of a spider's web to remove without trying to disrupt the rest of the spider's web. I mean, that's impossible. I think a much more practical approach, to come back to your question, I think makes sense, is to identify what are the actual core concepts, or otherwise the core pillars that every technology, no matter what niche within, say, financial services it's in, what are the core concepts we want every single piece of technology to have? In terms of transparency, in terms of the focus being on ultimate consumer consent, and ultimately retail customers having a very strong understanding of, okay, this is how my data is being used, et cetera. And then what I think makes a lot of sense is for regulators to ultimately have platforms that would be akin to, say, GitHub or the App Store, where anyone can, there's no regulatory, say, sandbox, where there's a certain number of people at the regulator, and then regulators in general. I've interacted with a number of these institutions. I mean, they're often understaffed, right? And usually, I mean, in order for any number of companies to be in their sandbox, they have to have a certain number of people on the regulator side to actually interact with them. So basically, what we're seeing then is a funnel where it's not actually all companies that can participate in these sandboxes. So I think the idea of having a platform that's fully open, anyone can participate in it, and then it's up to the innovators to decide, do I want to subject myself completely, or otherwise submit myself completely to ultra like But then, and even though, I mean, I'm saying this even from my standpoint, we wouldn't love that idea, but the concept of having like an ongoing monitoring-based approach, as opposed to a hyper documentation-heavy, process-oriented, slow approach, I think makes a lot of sense. So basically, what that would look like is the regulator itself, I think, first off, would have an engineering team within the actual institution that's able to create individual plugins that could be taken and then incorporated into software, and then in the same way that this works for all sorts of different types of like outsourced services. A company, say like mine, could just say, okay, from the point of deployment, we're going to allow for the regulator to basically see all of our data, right? And then we're going to allow for our data flows to show our compliance to these core principles. I think that ultimate orientation will, I think, in general, allow for regulators to actually be the leaders as opposed to the laggards often in terms of how different products are formed.
Yeah, very good. Gentlemen, thank you very much indeed for all of your contributions. I feel as if we've had a stimulating discussion so far. We've only started to touch the surface of some of these issues. We do have a few minutes towards the end. If anybody from the audience would like to ask a question, either in English or in French, please don't be shy if there's anything that you'd like to ask. Have we answered all of your questions already by the panel's kind of contributions? I mean, maybe if we could just talk briefly about, again, the sandbox approach. I mean, this was something that we discussed offline, and I mean, it has been kind of, you have individual banks who are kind of using sandboxes within the continent, and then you've seen other regulatory environments elsewhere where sandboxes are being sort of used. I'm just wondering if people can talk about the sort of the advantages and the disadvantages of that approach. Would anybody like to come in on that? Or I see, Mehdi, you or...
Sandboxes are very important for the development of open finance. So if we talk about the African continent, today we can find some between 10 to 12 sandboxes already existing, established in African countries. So there is lots to do to be able currently to allow fintechs to build new products, to do innovation. So there is a lot to do in that space. So currently, in Maine, we can find, without naming the countries, we can find top banking countries that currently doesn't have any sandboxes. So without sandboxes, we can imagine, for example, for drugs industry, can we sell a new drug without testing this drug in a laboratory? So it's very dangerous, and nobody will buy it and use it. So it's the same thing for financial services. So if we don't have sandboxes, it means that we are in the traditional banking model. And it means that startups and fintechs doesn't have the environment where they can test their ideas and validate their ideas. So I believe that it's the right approach, and I believe that there is a lot to do in that space, still a lot to do in African countries.
Yeah. I saw Mohammed was kind of nodding quite vigorously there. Just
yes, yes. Yeah, Mehdi summarized very well the concept, and maybe with another cascade, since I was past president of the Association of IT and Digital Users in Morocco, and we have launched at a certain time that opportunity for fintechs and startups to come to test, since they don't have the access to data, to processes, to clients, etc., etc. So we have launched that opportunity to push people to come, and for those who are interested in insurance, we have some companies within the group and within the association who are intervening in the insurance sector or banking or transport, security, etc., etc. So they could come for sure, and first they would sign an MOU, and then they would test using sandboxes and POCs and everything, so as to allow them to test their technology. So for both parties, it's very, very interesting. So startups, fintechs, and all those small companies, technology companies, they could test the innovation. And for the other big clients or players, they could have a solution that would maybe be useful and suitable to their processes and activities.
Yeah, very good. Winston, we were talking a little bit about this the other evening. I mean, I think you have a sort of a particular kind of view on sandboxes and sort of what they're useful for and maybe what they're not useful for.
Yeah, 100%. I mean, I think the main pro, just to respect the initial structure of your question, I think the main pro is sandboxes, especially compared to a world where there aren't any, is a fantastic basic first step to enabling for companies that may not be fully ready to, say, integrate to a bank, but to groom their products before getting the stamp of approval to then make the process of actually getting into a bank much faster. I think that's great. The key downside, and I sadly, I guess, see a few, is that sandboxes, by their very nature, whether it's a bank sandbox in order to test new software to consider implementing, or if it's a regulatory sandbox to allow for, say, a new company to get a feel for, you know, what are the how does their software align with the current requirements? The main problem is that it still is process-based, right? If we're talking about regulatory sandboxes or bank sandboxes, on the other side of whoever is having their product or their company solution tested, it's still people at the regulator. It's still people at the bank who have to be engaged in the process. And that basically means, by definition, there's a limited number of companies that can get full attention at any particular time. And I think one aspect that actually you and I were talking about the other day, and I'll share it here with everyone else too, is that usually when we're talking about financial inclusion, we're usually talking about it from the perspective of how do we ensure that more of the public are able to access different services. But I think it's also equally as important to consider, especially from the standpoint of trying to encourage more local solutions to problems locally. Part of financial inclusion, I think, should also include how do we make the systems that are required to verify that only solutions that actually should be ready for the market can get to the market. How do we ensure that those platforms are scalable? I think another aspect of financial inclusion should also be how do we make sure that startups, that as many startups as is naturally, however many startups are currently around that want to create a solution that is going to benefit the lives of people financially, how do we ensure that there isn't a cap as to how many of them can have their solution tested at one particular time? And the way to do that, again, I think is going to rely on going from being process-oriented to ongoing monitoring-oriented. Less of an emphasis put on documentation and having to have like a person, say, at the regulator who you're interfacing with all the time, and more of an emphasis put on, okay, we're going to give you a component to incorporate into your stack. And we're going to just, on an ongoing basis, monitor your compliance to these core principles. I think that's quite important.
Okay, no, very good. Sionle, do you want to come in on this at all? Or?
Thank you, John again. I believe that all has already been said, but just to wrap up, the question now is not if the financial institutions should move to the open finance. The question is not that one. The question is how we move to there, how fast we move to it, because it is a matter of how we are able to meet the expectations of our customers, evolving expectations, because they are evolving given all the changes we are seeing in our environment. So there are two levers to play this. First one is to ensure that we have the fintech players that are capable of providing the solutions that help us to be in the open architecture world. So this is the first one, and they will need, of course, as already been said, it has already been said, they will need the environment that enable them to test the developments and ensure that it will work, and the sandboxes are clearly necessary for this. The first lever is the financial institutions themselves, how they get ready to be there. We've already explained it. And in the end, the challenge or the objective for us as banks, as financial institutions, is how we improve our customer experience, how we improve our operational efficiency, as it has already been said, because it's a lever to cut costs, and how we improve also our people experience, our staff experience, because the more we automate all the works that can be automated, the more we give to them value-added task to be undertaken. So this is the challenge for us. I believe we must be working hard to get there. Thank you.
No, thank you. I think our time is nearly up. This is your last chance if you'd like to ask a question of any of the panelists or to make a point. Anybody? I think I know, they've given you such good perspectives. You don't have any questions. All of your questions are asked, so you will leave very happy. Gentlemen, thank you very much indeed. Thank you, Mohammed. Thank you, Mehdi. Thank you, Sionle. Thank you, Winston. And thank you very much for joining us today.
Merci à tous. Merci.
Thank you. Merci à tous.